FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And as we continue the blueprint series, guys, this will be the last video of that particular series. And let's jump right into it and let's go ahead and start to break down backtesting. So that's what we're going to talk about next is backtesting. Some of you may ask, well, why do I have to backtest? Backtesting allows you to learn how the patterns and timing come together. It builds your confidence in yourself and your trading. It helps your brain to see the patterns as they are happening. It builds your behavior or builds your understanding of the market maker behaviors. It gives you time to think about what's happening. When you're trying to do this live, you pretty much have 15 minutes, right? Before that candle ends or whatnots. When you're backtesting, you don't have that time pressure on you. You can really think about what's happening. And so the more that you do it, the faster you're able to process what's happening when you're backtesting. That completely transfers over to when you're looking at the live chart, because your brain is already processing everything that's going on at a way faster speed, because you've had practice of doing it over and over and over and over again. Also, the data that you collect is literally pure gold. The data that you collect is what everybody wants for free. If you take the time to go back, let's say on pound USD, and you take the time to go back, let's say you're using TradingView or whatnots, and you go back, I believe you can go back up to 18 months. Let's say you go back 18 months and you start counting the total amount of let's say type 1 setups that happened for 18 months straight, right? Knowing how many type 1 setups that pair produces versus another pair is an advantage, because you know what pairs produce the most type 1s or type 2s or type 3s or whatever the setup it is that you're looking for. So the example that I used yesterday of pound NZD and pound USD, we had somebody do that. GU produces 3 times more type 1s than GN does, than pound NZD does. So if you're a trader that likes to trade pound NZD and you like to trade type 1s, you're trading the wrong pair. You should be trading pound USD instead. But you wouldn't know that unless you went and got the data first to tell you. So backtesting, what kind of stuff do you want to get when you're backtesting? There's a lot of different things that you can collect. And so the problem is, how do you know what to collect, right? So if you're backtesting, let's say GU, and you go back 18 months or whatever, what kind of data should you be collecting? Well, the one thing that I want to know is how many type 1s, how many patterns does it produce? So if I can go back 18 months, how many type 1s? So we'll put like T1, how many type 2s, how many type 3s, how many type 4s, right? That way you know what's the pattern that this pair specifically likes to produce over and over and over again. Because if I'm a type 3 trader or a type 3 trading setup, that's what I like, and GU just happens to produce the least amount of type 3s, guess what? I'm trading the wrong pair, right? So you need to find out how many types of each does that pair specifically do. That way you know what pair you should be trading based upon your actual setup that you like. Okay? So the next thing is, how many cycles does it do? So meaning, like, how many market maker cycles, accumulation cycles, or trending cycles. So what type of cycle does this specific pair like to create most? if you want to get really specific, let's use type 1s for example. For type 1s, you want to know what's the average time that the second leg of the M or W is produced. Think about if you knew the average time that GU produced the second leg of an M or W. Let's just say of a type 1. What would that do to your trading? Or better yet, how about which box on average is most likely to produce the second leg on average? Is it the London box or is it the US session box? Meaning, what if you find out that most of the time on average the second leg of an M or W is produced in the US session? What would you do at that point? Right? You look to trade New York, right? You would look to trade in the New York session. Same thing if you found out that on average most of the second leg M's or W's are produced in the London session. Yeah, or find another pair if you can't trade. Yes, exactly. Yes. There's no cycle that I can expect to see more than others on any specific pair unless you go back and you count the actual cycles. Right? If you go back and you start counting, the amount of trending cycles, accumulation cycles, market maker cycles that pair produces, then you would know, hey, this pair likes to produce this cycle most often. So example, I know that gold likes to produce trending cycles the most. I know that gold likes to produce multiple back-to-back cycles. A lot. I know sometimes it could produce 3 trending cycles in a row, back to back to back. So having that information, that only comes via backtesting and going back to the charts and getting the information, getting those data points. So take it a step further. What if you wanted to find out the average, like I was telling you, the average time of the second leg in the box, right? So what if you found out that let's say on average the second leg of the M or W likes to be produced on London session, and let's say on average the time that the second leg is produced is more than likely between 4 o'clock and 4:45. Knowing that information, what would that do to your trading? Right? So now if you know that, I'm only getting my ass up at 4 o'clock in the morning and I'm going right back to bed at 4:45. So while everybody's up 4 hours or whatever, or God knows how long they've been up, you set your alarm clock for 4 o'clock in the morning and you're done by 4:45. So you can get as specific as possible as you want. The more specific that you get, just think about this, the more specific that you get, the more specific data that you have, at the same time, it means less trades. But the good thing is the trades that you do take have a ridiculous amount of percentage of actually winning. Do you know what I mean? So when you're backtesting, what I would do is, so let's just say that you like to trade type 1 setups, right? And so let's say you want to trade, let's say you like type 1 setups and you know that GU produces the most type 1 setups out of all the other pairs. All right. So now with that information, you want to find out, okay, what do all of the type 1 setups all have in common? Because they all have to have something in common, right? Like, I didn't make up the 5 or more candles between first and second leg out of thin air. You get what I'm saying? That didn't come out of thin air. Okay? Why 5 candles and not 4 candles? Think about that. Why not 4 candles? Why does it have to be 5? Where do you think I got that information from? So what you do is you go back as far back as you can, which again, I think it's like 18 months or so on TradingView or whatnots. All right, so let's say now that you start looking at trade setups, and you're really interested in like type 1 setups, right? So let's say you're marking down possible type 1 setups that are here, that are actually like good tradable setups, right? So let's say you can use this tool here and literally start marking them. Start marking the type 1 setups. So you're not even having to replay, you're just marking them down. So you go back as far as you can, right? And you start to now look at all of the type 1 setups that you have marked. And you literally ask yourself the question, okay, what makes this a good type 1 setup? What kind of confirmations are these type 1s, do these type 1 setups have, right? So again, how many candles is between the first and second leg? What does the TDI look like when that trade setup happened? Okay. On average, how many times did I get a railroad track star pattern or a cord of wood on the second leg so I can get in super early? How many times did I have a pullback right after a big, engulfing candle or big railroad track or something? So all these things matter because now you can build a list. You can build a list of different attributes that a type 1 setup has to have in order for you to take the trade. So you could have like a list of, of 5 to 7 things. How many ever things you find? And so what are those things? You could say, hey, I noticed that most of these type 1s are pinning to an EMA or pinning to the 200 or whatever. Well, I found that most of these setups have the second leg railroad tracks. So now you start to create a list of 5 to 7 confirmations that a trade must have for you to take that trade. Just like when we were replaying the charts in London, we were going through, okay, what makes this trade a good trade? The pattern is there. Is it in the right timing? Do we have a second leg in the London or New York box? Does the TDI, is it in the right location on the TDI? Do I have a hook on the TDI, right? Did I get a cross here on the TDI? All these things are just basically used to help confirm the trade setup that you're looking for. And so you can build a list for just your type 1 setups, your type 3 setups, whatever setups you want to trade, solely based on the data that's available from that specific pair. Is this all making sense to you? Is it clicking? You know what the biggest problem with all this is? That it takes time to do it. That's the only drawdown. It takes time to do it. But how much easier are you making your life by actually doing it? Just think about how much easier your trading is going to be once you actually do it. And you have a list. your trading at that point now becomes very black and white, very yes and no. The things are either there where I can check them off, or they're not. So think about what I talked earlier when we were doing the replays of the London session, is like, what are you more likely to take a trade that has 3 confirmations or one that has 7? The further back that you can go, the more validated your data is, because the bigger the sample size. It's like you can do a small amount if you want to, but that's a really small pool of data. You know what I mean? A study that you do based on data captured for a 3-month period versus a data captured of a year to 2 years looks way different. And so the data pool that you get out of a 2-year, of collecting data for 2 years is going to be way more concrete than 3 months. Because what if within those 3 months you were just in a big, upward move or whatever on a daily chart? Okay. So this is just a quick template so you can see what it looks like, right? It allows you to literally log all of your trades that you take when you're backtesting, or even live, right? So you just put in the date, the day, the session. So if you click on it, you could change whatever session you want. If you're counting levels, you can put whatever level you want, hourly, what time you entered. So every aspect of the trade that you take, you can log. Entry, everything. So you have all the options that are available. And then at the very end, you can basically take a screenshot of what the trade looked like before and after. Here's the empty one where you could start your own. You know what I mean? This is like an example of what it would look like once you have it filled in. But you go to template, and then you could fill this out. You can basically duplicate the sheet, rename it so like GU or whatever, and keep the template blank, obviously, so you can keep making duplicates of it. But then you could start to literally fill out and then take your screenshots of entry, paste the link here, and then paste the exit, what it looked like after it's done. Reason for exit, if you're exit early, what's the reason that you're exiting early? Wins, loss, all this. Say whether you win or whether you lost, whether you win or lose it, your take profit point, what is it? So everything is literally right here for you. Divergence, true, everything. So there's no, you don't have an excuse not to journal your trades. All right, guys, so I hope you enjoyed this particular video. I hope it brought you some value. I hope the series brought you some value in the sense of how we trade our strategy and what exactly it is that we do when we're taking a look at the charts, and most importantly, when we're trying to find setups within this strategy. Guys, if you like the series, please comment below. Let me know your thoughts on it. Like the video, subscribe to the channel, and we'll see you in the next one. Guys, if you need any more help or you like the content that we provide on this channel, come on over to the FXN MasterClass. It's available right now. What you get essentially is a lifetime membership, a full mentoring course, an advanced course. You get the Blue Summit videos, weekly Q&A sessions every Sunday, group session archives, which that by alone has about 100 hours of content, weekly analysis videos, midweek analysis videos, MT4 and MT5 indicators, a customized trading journal so you could actually journal your trades every day, and then a backtesting journal that you can use to backtest and collect all of your data. Not to mention a mentoring private chat, guys. So all the information is in the link in the description if you want to join now. We look forward to seeing you there, guys.